We just got November results, and it was the worst November we've seen since 1999, except for November 2008 was a little bit worse, but not much worse. And so what's happening is it's just record unaffordability. People can't afford these homes. And and sellers just they don't want to accept reality. They don't want to accept that their home's not worth what they think it is. You can look that wage growth is slowing, and so your median income cannot afford a median sales price, and it's very distorted. That historical relationship was very tight.
Okay, ladies and gentlemen, so today we have Melody Wright back on the show. And today we will look at the US economy, the real estate sector, of course, the new Fed, interest rates, and many other very interesting topics. Melody, thank you so much for being here.
Thank you for having me. It's my pleasure.
It's a pleasure to have you back, Melody. If we could start by looking at, the big picture. So what's your outlook on what's happening to the real estate market right now?
Unfortunately, it just remains frozen. We are seeing pockets of what I would say motivated and distressed selling, but we just got November results, and it was the worst November we've seen since 1999, except for November 2008 was a little bit worse, but not much worse. And so what's happening is it's just record unaffordability. People can't afford these homes, and and sellers just they don't want to accept reality. They don't want to accept that their home's not worth what they think it is. I encourage people just take a house near you and watch it. And that'll tell you everything you need to know, because these homes are really sitting longer on the market and they're not moving. And so, you know, interest rates, we talk a lot about, they've recently come down a little bit from May, and that's largely due to Fannie and Freddie buying mortgage-backed securities. But it hasn't generated enough, more, not really any more activity. We had a little bit stronger October, and I was hoping that would go into November, but it didn't. It just kind of died, which likely had a little something to do with the trouble you were seeing in the stock market, just some wobbliness. But yeah, the consumer is just, we got University of Michigan consumer sentiment. And, I think one CNBC commentator said it's the worst he's ever seen, and his database goes back to the 70s. And so I just think you've got people, the inflation has just beaten everybody down, and they can't, insurance, taxes, it's all higher, electricity bills. And so what I think you're about to start seeing is we've had a little bit of motivated selling over the last couple years, but now these landlords who we've got record vacancy in multifamily, and the single family rental market is also got high vacancy. And I think landlords are soon going to have to start selling because they're not cash flowing anymore. So I do think that the spring is going to be active, because all these people that have delisted their home because they couldn't get what they wanted for the price, they'll be back. And we'll see if their delusion breaks. But we've had a lot of stories in the national news about national home price decline. So, and notably, sorry, this is a long answer, but notably the Northeast, if NAR reported correctly, they went from booking a year over year median home sales price incline around 6%, 5%. It went down to 1.1% this month. So, I think that we are seeing kind of a turning in the national narrative now, and that in reality, many people are starting to accept that home prices are going to have to come down.
Right, yes, we have a lot of motivated sellers, rage delistings, and the market is frozen. But it all happens while the stock market is still very close
Yeah.
to all-time highs.
Yes.
And if you look at the technicals, I was looking at, Nvidia chart, Bitcoin chart, they look quite ugly. I definitely like to use Bitcoin as a liquidity slash
Me
sentiment
too.
indicators.
Yeah.
So it looks very interesting. And if, many experts do believe that it's time for a pullback, right? It doesn't have to be 40, 50%, but even 20%. So do you believe that could correlate with the stock with the real estate market also going down as well?
Yeah, the stock market's the last holdout of, sort of the soft landing idea that somehow we're not in as bad a shape as we really are. And so when that breaks, it really is, I think, going to break the housing market as well. And like you, I look at Bitcoin and we're not seeing the Santa rally joy in Bitcoin. And I really do see that as a liquidity indicator. And so you more and more we're getting stories challenging this AI mania, challenging this focus on those specific chips. And so, I think that we are going to see a correction there, and it really will likely bleed over into the housing market because sentiment is, I mean, people are going to be, when the boomers who own most of the homes see their stock portfolio going down, they're going to be, okay, I need to start making some different decisions.
And Melody, if this all unfolds, how deep do you think this fall could be for the real estate? Of course, it's not a nice question, but just an estimate of where you believe it could go.
Yeah. So listen, I would love for everybody to be able to afford these prices. Like people call me a doomer, but the fact is you can just look at household median income and you can look that wage growth is slowing. And so your median income cannot afford a median sales price. And it's very distorted. That historical relationship was very tight until you get into the late 80s. And now it's doesn't make any sense because you've had so much speculation in the market. And so I think that speculation is going to have to get run out of the market, as well as at the same time, you've got the silver tsunami and the boomers who are going to be, aging out. So how low could it go? I think it could go to where people can afford a median home again. And so that could be in some areas 38%, in other areas it could be larger. And in those boom towns where it just went out of control, but it could take several years to play out. But honestly, unless we have, something that comes along where we're all suddenly making a ton more money, like really high quality jobs, then the supply is just simply going to drown everything out that's coming to market. And after talking for years about some sort of shortage, they did that last time as well. I mean, we don't have a shortage, and so reality, what we do have is the boomers aging out, and that's going to be a huge headwind to housing for the next 10 to 20 years.
And Melody, is it a bifurcated market? So would there be certain sectors of the market where it's still doing okay?
Yeah, so it's interesting. You're seeing it just like you're seeing in consumer sentiment results. Even your 1%, your super prime, are starting to pull back because I say this all the time. People who are rich don't stay rich by making stupid decisions. And why would you, own 10 homes that have electricity bills of XYZ, property tax, insurance, and you're only in one of those most of the year? Like that doesn't make any sense. And so you're also seeing luxury just sit all over the country. And of course, we had a lot of luxury spec building. I mean, this I I've never seen anything like this. Like who would take the chance of building like a $13 million home, $40 million home on speculation without like a buyer? I mean, that's just nuts to me. But you saw a lot of that because everybody thought back in 2021 when wages were going up that we were going to all get rich.
Yes, and at that time it was very difficult to hire because people wanted, very high paying jobs. So yes.
Exactly.
Um, if so, I'll try to look at it from this side. So interest rates are slowly going down. The Fed's trying to lower interest rates. It looks like we're going to have a new Fed chair, and likely he's going to be, in favor of easy money
Right.
policy. So from that side, someone may say, well, that in theory should be good for the housing market. And also, if you look at the structure of the monetary system, well, okay, if we do get a crisis, they will try to fix it by increasing the money supply, printing more money, and over the long term, things will still be good for the current owners. And things are going to be good. So how are you viewing this side.
Yeah, so, interest rates went really down as well during the last cycle. What happens when you get to this place is, people can't qualify anymore. And so what we're seeing right now, like let's take mortgage refinance applications. The Fed just came out, and it's over 42%. I think even 43% that were being rejected, the highest since they started tracking that. Purchase applications over 20% being rejected. And then you've got people canceling sales left and right because when they get to that final closing table, they simply can't afford it. But the thing is, you don't have the credit quality. A lot of the folks who want a home, their student loans are delinquent. Their credit scores have gone down. And so rates may go lower, but it's not going to save anything because, and I question whether they really will. Like, you've got Fannie and Freddie in there right now buying mortgage-backed security. The 10-year has just said no. I don't care what you're doing, Fed. Like it doesn't matter. It's just sitting right here. And there's a lot going on in the world that could keep that the same. They're also going to start these reserve management purchases and they'll buy on the short end of the curve and it could cause a collateral shortage. And so you could even see increased selling of the 10-year, as well as our partners China and Japan have held back, and so there's a lot going on, and I don't think we can say definitively. I mean, they've been trying to say it for 3 years that rates were coming down. But I just don't know how far we'll really get on the 10-year. And with Fannie and Freddie buying mortgage-backed securities and it not really going down that much, I just don't see any tools that's really going to come in to save the housing market. And by that time, with unemployment going up, layoffs accelerating, people will just not be able to qualify.
Some really, really good points, Melody. If we do have this sort of crash-ish, will the government try to get involved and save the market? And if they do, how do you think that would look?
Yeah, they're definitely going to try to get involved. Here's the thing. Last time, the way that we, got out of the foreclosure crisis is that Fannie and Freddie, asked Wall Street to come in and buy those homes for long-term rental, and they did that. Those people are now net selling, and if they're not net selling, they're making strategic purchases with their family, all of family, like between each other, to kind of keep things going for a little while. Because if they sell to one another, they can turn around and refinance a deal. Like if, they support the top line price, but most are net sellers. And I was in the room with one of the largest asset managers out there and about a month ago, and he said they, as soon as leases were up, they are rehabbing and getting them out and for sale in the market. And they're chasing the price because they need to offload those. Now there's a couple markets where they're not doing that, but a lot of them they are. And you can look at Atlanta, who has a very large institutional ownership presence, and prices are going down there significantly because that's what's happening. The institutionals are selling. And so, if you just think about this as a story, a logical end of the story, I even saw one of those institutionals crying on a podcast recently. I mean, I'm exaggerating, but he's like, they begged us to come do this because they're all going to be over their skis and losing money. And so who's going to come buy these properties? Well, I think the government will probably get involved. I wouldn't be surprised if they start buying properties. They'll probably start by trying to create a program. There's a lot of these programs already, and I've seen some bills in committee where they subsidize it more. Like they'll say, okay, a developer, if you target these homes for affordable housing, you'll get favorable loan terms or you'll get some sort of subsidy or things like that. So I think they'll start that way, trying to just maybe give loans out to nonprofits, things like that, or subsidies. But then I think they're going to have to start buying homes, believe it or not, from the counties because there's record vacancy out there. So that might be what they do.
Right. Yes, because these, big buyers like BlackRock who have been involved buying all the houses, they would be the back holders in this scenario. So they
That's
will not be
correct.
able to do much.
That's right. That's exact, and that they are the back holders. Like you can look at Blackstone Real Estate Investment Trust, and I mean they are, You can't get any information out of them because it's not public. But oh my goodness, like the losses that they're taking are massive, and so they aren't going to be, they can't come to save the market. They're under distress.
Yes, Melody, I've seen this stat that, the medium home buyers is now around 59. And that's a crazy stat if you think about it. Like, it just tells you everything you need to know about how overvalued this market is and how unaffordable it is to normal people. So that again proves your point that we just need to have some sort of market
Yes.
correction to achieve anything close to normal prices. And Melody, if we could talk about younger generation and how they're trying to get involved with this market, it's not easy for a young person to have a glimmer of hope of owning real estate at this stage. So I'm based in Ireland, and it's very similar in here. Like, young people don't really think about owning a house at a young age, and even to get enough money for the down payment may take them until like early 30s. It's a crazy situation.
It really is. It's simply unaffordable. I mean, housing is just unaffordable. I saw a stat yesterday that, and I haven't verified this, but there were like 38 million Gen Zers living with their parents. I mean, they can't form households because they can't afford the rent. I mean, you look at most of the jobs. I mean, we're seeing the highest unemployment in those younger cohorts, and so most of the jobs that they could get are low wage. They worked at Wendy's or they worked at Dunkin' Donuts. There's no way they could afford housing. And so they can't form households. So yeah, it is way too unaffordable. And, Michael Green did a recent series where he talked about what the true, what living in poverty is really like in the United States when you just look at the bills of things you have to pay. And he came up with a household median income of $140,000. Now that might be, a little high, but that's the reality is that people even making that much, we used to think if you made $100,000, you made it, but they can't even afford with health insurance, car insurance, energy bills, things like that. And inflation, they can't even afford to own a home. So, yeah, something has to change. This just isn't sustainable at all. And, if you just kind of close your eyes and stop listening to what everybody's saying and think about what has to happen, is there has to be a wealth transfer to the younger generations. Like it simply has to happen. And if we don't, if it doesn't happen, then you're going to have a lot more social unrest like we're seeing right now. I mean, this is just the escalation in violence is just so concerning. And I think it has a lot to do with people not being able to get jobs, particularly young men. I worry about that cohort the most. It's as if there's nowhere for them in society. And so, we've got to fix these problems. And right now, it doesn't seem like anybody has truly the will to fix the problem in our political parties. And so if they just let the market run out, it would get fixed. I mean, if they would just leave it alone, if they would get out the government scaled back just a little bit, this would get fixed. But they're doing all this engineering at the end of the day that I don't think is going to be at all successful.
Yes, and I think it all comes from education or lack of it, because under the current monetary system, the things that they teach us in school, you need to work hard, save, get a good job, save money. It simply does not work because money is fiat. It does not store value. So,
Right.
if people would at least be taught of, okay, so we have to live under the system, but you have to convert that fiat into something tangible that actually, either produces certain value or at least holds value, like gold, silver,
Mhm.
hard assets. And I think it's so unfair. Like, for people like myself, I love investing, I love getting involved, but many of my friends, they have zero interest, so they don't want to get involved in
Right.
the market. But it's really
Right.
unfair for them because the Fed will try to fix every single problem by just increasing the money supply, and likely people who will benefit from it will still be the people who own all the assets. So yeah, I think it's a huge, huge problem.
Yeah, it really is. And like you say, I had no financial education growing up. My parents didn't either. I didn't understand what I was doing when I signed up for those student loans and a credit card on the same day, and I completely got sucked into the debt slavery system, until I woke up and saw and started to really understand what was happening. I read Danielle DiMartino's book Fed Up, and it really opened my eyes. And I was like, okay, yeah, this is crazy. But I myself was a useful idiot in the system and didn't even realize how I was participating. And I wish someone would have told me about gold 10 years ago. And when I finally did learn, obviously I got involved, but wow. And so that's what I'm really passionate about, is just educating people on what's really going on out there. Because with consumption 70% of GDP, it is imperative that we all spend. That's what they need us to do to keep this economy going. But that's to our detriment and to our financial ruin in many cases. And I think, unfortunately, what we're going to see again is a lot of young Americans who are going to be hurt and ruined by some of the really unfortunate decisions they made in during the mania in both the stock market and in the housing market.
Yes, I'm very passionate about these topics as well because for me, once I realized all this, I became more, entrepreneurial by default because you understand that,
Right.
well, you treat cash like a hot potato, right? So
Right.
you receive the cash, but you have to do something with it, otherwise it's going to lose value. And I think that mentality, would help a lot of people. If we could, Melody, talk a little bit about the renters market. So, for example, here in Ireland, it's even unbelievably difficult to find place to rent because everything is full, everything's really expensive, and it's reaching that top point as well. Would the situation in US be quite similar, or is it slowly declining as well?
It's slowly declining. We had so much multifamily built, more than we had built in the 70s without the demographics to support it. And so they just went bananas, and they're still building it. They're still building multifamily in places like Phoenix that, I mean, have so much housing. But yeah, your vacancy is going up. Apartment list said at vacancies about 7.2%, the highest they've ever seen since they started their series in 2017. Co-stars reporting the same thing. And so again, all the supply, it takes time, and it took longer because, like you say, people couldn't hire contractors to finish these projects. And so it took them longer to come to market. And so while everybody out there screaming shortage, you had everybody and their mother decide to pile in and build a project, but they didn't pay attention to what was getting built down the road. And so, yes, now all of that is coming online, and you are seeing vacancy increase and rents go down. And that is going to be the trend because the supply, again. And the other thing that people don't want to talk about is, um, all of our population growth in the United States was largely illegal immigrants last year. And so with that, those folks not coming in, we're going to probably see declining demographics, as well as, there are people that are self-deporting, there are people that are getting deported. And so there's nothing coming our way. There's nothing coming our way to stop this trend of increased and chronic vacancy. And it's going to be chronic. And I've seen it all over the country. I drive all over the country. I've seen it all over the country in places you would be surprised. I've talked to somebody in Wisconsin last week who said that they're doing it there too. They're doing it here in my small town, and they're doing it wherever there's an empty piece of land. Everybody got in on this gig, and it's going to be painful. As they realize they can't sell the home or they can't fill the apartment.
Right. Melody, this normalization of valuations, if you look historically, does it happen rapidly or does it happen slowly over years? Of course, we don't know how exactly it's going to unfold, but if we look at history, how does it usually unfold?
Slowly, usually. I mean, slowly. Now what I think is interesting about this cycle is that we had rapid appreciation. I mean, rapid. What took years last time to happen actually happened in about 18 months. You just saw double digit appreciation. And so it could be a little faster this time around, but typically this stuff takes forever. I mean, it has taken us this long. I mean, we have known that there are hot pockets of real issues for almost 2.5 years, almost 3 years, but yet it's taken this long for it to become a national narrative. And yes, every region's a little bit different in their problem, but they all have a problem. If the Northeast didn't overbuild, their issue is demographics. They have very, very aging demographics, and not a lot of people moving to the Northeast. Most people are moving to the South.
And if the situation with, with all these buildings that were left empty after COVID, did the situation change there, or did everything change so much that right now the price of these, I forgot the name on how you call these type of real estate.
Commercial real estate.
Yes.
Yeah. So, a lot of people thought that the buildings were empty because of COVID, when in reality, we overbuilt. I mean, what's fascinating is when I lived in Pittsburgh, I lived next door to a big office park. It was live, play, work is what these things were, where they'd build like 20 office buildings and they'd have a nursery. They'd have a little fake downtown with a bunch of restaurants, nail parlors, things like that. And I had one next door to me, and it was largely probably half filled before COVID. I mean, there's nobody there now. But at the same time that we had all of that real estate, we went and built more. Like in Austin, in Dallas, and these places, you can see giant high rises, and right next door are ones that are completely empty. And this is also the case in New York. And so, yes, we have overbuilt. There's plenty of office space. And what you're now seeing is people extended and pretended. They stayed alive until 25. These were things they kept saying, but now they're taking it on the chin. I just recently wrote about a Freddie Mac commercial real estate securitization that had assisted living facilities in it, believe it or not. And Blackstone had to take a 96%, I'm sorry, 89% haircut. It was a 96% on one and like a 50 on the other, but combined, they sold two senior living assisted facilities and took a $36 million loss. I mean, and you're just seeing this everywhere. And so soon that's going to hit the system. If it isn't already, when you see the repo markets, when you see this increased borrowing, there's trouble out there. And so it could be hitting somebody right now, but we're seeing daily just unbelievable slashes in value. And, a lot of this stuff is just going to have to be bulldozed. It won't get sold.
Yes, and it looks like this shift is final. I don't think we're ever coming back to that pre-COVID.
Oh, no.
Everything completely changed. So Melody, if we can talk about, portfolio structure. So of course, in this environment, we need some cash, probably precious metals, of course, but how would you be thinking about structuring a portfolio in the current environment?
Yeah. So I'm really conservative and I'm never going to be rich. so I think just as you say, cash and metals is really all I'm looking at right now, because I just, I feel like the market is just, it's so disconnected from reality. You look at something like the builders who are finally getting pummeled. I mean, they're finally getting hit, but it took years. And I saw what was going on in 23, was quite obvious what was going to happen with the builders. You couldn't convince anybody, and their stock was to the moon. And so you have to be very sophisticated, in my opinion, to play in this current market. And I'm not. And so cash and metals is really all I can stand firm on right now. Short dated treasuries to some degree, but short dated. I mean, I wouldn't be buying a 10-year treasury right now if my life depended on it. I mean, I'm sorry. And again, I'm not sophisticated. I don't play, I really am more of like a value investor. And I'm not going to, I tried. I tried at the beginning of the market. I thought I could, do a decent job of it. And I just realized it would take way too much work. And I don't have time for that. So I just, that's basically my portfolio right there.
That totally makes sense, Melody. Just before we wrap up, what advice would you have for the younger generation who are at the beginning of their wealth building path. So maybe they're 18, 20, 22. They want to, start building wealth. They want to get involved with this wealth building process. So what advice would you have for the younger generation?
So first, educate yourself and not by influencers that are trying to sell you something nonstop, right? I mean, but truly educate yourself. Learn about the financial markets, learn about the history of the financial markets. And what I would say, like to your point about not, it's hard to save, it's very difficult to save. What I would say is just don't get into debt. Like if there's one thing that I would tell a young person, do not get into debt. And I realize you think you may not be able to go to college, you might not be able to do X, Y, and Z. But in reality, there's so many programs out there. There's so many programs that you can apply for. And like here in Tennessee, we're very lucky because you can go to school for 2 years free here at a community college. And so where you live actually kind of matters too. And so that's something I never really understood when I was young. And I wish somebody would have told me is that where you live matters in terms of the opportunities that you have. And so, um, I would say educate yourself. Anybody that's trying to sell you something like crazy, they're not looking out for you. It's the people that really talk with nuance about the markets that I would recommend. Not this shiny guy with the Lambo or whatever. So my biggest point of advice, educate yourself and don't get into debt.
Great points, Melody. So we went through pretty much all the questions I had. Would there be anything else that maybe you would like to add that we haven't covered?
I would just say, hold on. There is hope to our young Americans. There is hope. And, vote with your dollars. And what I mean by that is you can't afford that home right now. You simply can't. So don't get in over your head because it will be your financial ruin. But we do have power by making certain choices to not do something. And that's very different than what most real, they get into the FOMO, the YOLO, and also don't buy into the you only live once because you do only live once. And the decisions you make are actually very important to your future. And so, but there is hope. Because we, the market, are saying no. And again, lowest sales we've seen since 1995. And we've increased population by 20%. I mean, that's insane. But we're saying no to these prices and they will come down no matter what everybody is screaming at you. So just hold on to a little bit of hope.
So Melody, I have really enjoyed our conversation and thank you so much for your time.
Thank you for having me again.